we are pretty much breaking out into the metals. And good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, live streaming from TikToker. We're taking a look at the gold market here, trading last at 1794.10, and it has completed all of our targets for the day and then some. The same thing for the silver market. So for those that basically followed a recommendation, take some profits up here. The code is completing targets here for the gold market and for the silver market, and use your discretion basically to hedge or to synthesize or to lock in some of the profits that you have if you've been following here, without eliminating the upside potential, because you don't need to eliminate the upside potential. As far as day trades are concerned, there's really nothing going on. The market is in a blow-up stage. So why don't we just watch the markets here for a little bit until things settle down a little bit. $26.83 for silver, up 98, and the sell to level is 27. The weekly sell to is 27.21, which would be the targets that we're looking at for completing the weekly patterns. Both gold and silver seem to be very strong here today. The target for gold is, the weekly target is 1806. The monthly target is 1809. And the 360-day cycle target that we're looking at is 1810. So we're very close to a major pivotal point of 1810. We want to just track this market here. Too fast to do anything else here. We got some really nice big fat profits here this morning, and we want to protect them. We want to lock in some profits if we can without eliminating the upside potential. We've been recommending our traders, our subscribers in the private trading room pretty much to hold on to your long positions, and we covered the shorts pretty much last week when it came down into this level here as a consequence of this spoofing that was done. And you can see the market has gravitated from the buy to level of about 1759 and came very close to the monthly support level of 1754 that we're holding on to. This is the monthly trading range, and I want to double check these numbers a little later on here to see if we're looking at the right numbers for the beginning of May, actually, that we're looking at. Okay, the sell one level is 1809. Let's check the variable changing price momentum indicator for this month is 1758. So it is coming up as the market moves up in the right direction. Sorry, the sell. This should be the sell 2. Let me fix this here. And that is 1850. 1850 is the sell to target for the rest of this month. 1809 is the sell one target for the rest of this month. I am updating the current monthly numbers for the month of May. $17.17 now. We're up to $17.17 on the monthly buy one level. So as you can see, when the market is moving in the upward direction, the code adjusts the levels here. That's why it's called the variable changing price momentum indicator. The VCPMI stands for the variable changing price momentum indicator, which essentially is a high mathematical probability model that adjusts to the supply and demand factors in the market. That once it identifies an average price, that you can extrapolate the extreme levels above or below that average price, where mathematically it is at its maximum level, and or the level where you can expect a reversion to unfold. So what I'm doing here is basically showing you how I am trading basically the VCPMI. What I would like to do on this segment here is to show you the process basically that most subscribers really go through this, which is really a very simple process to follow. When you become a subscriber, you get access to our exclusive membership on our homepage and the Equity Management Academy website, where it allows you pretty much to take a look at the algorithms for the daily, weekly, and for the monthly numbers. And these are the numbers that pretty much we are obtaining from the automated TradeStation platform that gives us the calculations of about 80 algorithms and stocks, ETFs, derivatives, futures derivatives, options. It pretty much covers the universal landscape, you might say, of trading instruments. Now, Obviously, if you're a self-directed advanced trader, what you want to do is focus on your objectives, obviously, that you have in terms of a sector that you want to trade. And once you identify the sector, then you can identify the instrument. And in this case, for myself, I have chosen to use the VCPMI as a driving tool for trading in precious metals. I trade gold, silver very actively. And I am also trading the GBTC, which is the Bitcoin Grayscale Investment Trust, as well as the Coinbase. So we're adding some virtual instruments. And when you get the data for the day, let's say, then you can input it on your chart if you're not a subscriber of TradeStation, but you can also update it on your chart, as I do, for trading purposes. So I can pretty much integrate the prices of all of the trends, daily, weekly, and the monthly numbers that I want to see. One of the important things that once you upload the data, for example, and you're looking at the daily numbers in relation to the weekly numbers, one of the important things that we look at is the harmonic relationship between the trends. And when you identify the harmonic relationship, that is the most optimal relationship mathematically of the algorithm. The trigger points are activated once the market reaches that target. The first bar is a trade alert. The second is the signal. If it closes above, it's a bullish signal or a buy trigger. If it closes below, it's a short or a sell trigger. The difference is that when you're in blue, and the AI has identified the color in blue as the highest probability mathematically, where the market is at a 90 to 95% relative to the implied volatility to the mean of the daily, in this case that we're looking at, that upon confirmation, the market will revert back to the mean. As you see here, reverting back to the mean. Once it touches the mean, you go neutral. If you're trading around the mean, you do nothing. The AI suggests that you do not trade around the average because it's 50-50 standard deviation. You can get chopped up pretty good. So as a self-directed individual and using this information as a GPS, I go neutral, which is what it says. When the market trades above the average price, in this case that you see here, the daily and the weekly, as we come into this week, 1771, 1769 is the daily average. The weekly average is 1771. Tells you that if the market breaks through this level and trades above it, it activates a bullish price trend momentum. And in this case, the daily signals met the targets of the extreme above the mean of sell 1 and sell 2 at 12 o'clock a.m. And when it breaks above that sell 2 level, the program goes neutral daily. So it goes neutral in the resistance of 1779 becomes the support for the next higher fractal in price. And it integrates the algorithm with a weekly signal that is still long by trading above the average of 1771. The price trend momentum is long, and the targets are completely activated, which is the sell 1 level and the sell 2 level. The sell 1 is 1788, as you can see here, was completed at 6:15 a.m. this morning. And the 1806 is still very active. Target. Right above it, you're looking at the sell 1, 1809. So in terms of using this instrument as a GPS, basically, it is a question of your size, your profile, and understanding the methodology of the algorithm in identifying the momentum and also the extreme levels of supply and demand, which is what I look to trade. I don't trade the average, I stand neutral. But if we have a major trend, we're talking about day trading right now only, but if we have a major trend like we have here that we've been trading against, so to speak, in the precious metals since August of last year when the market reached 2089, this has been a corrective pattern, and it looks to be the completion of a second wave if you apply Elliott wave principles. And we have entered pretty much into the third wave, which is the strongest, one of the strongest in Elliott wave theory. The third and the fifth are the strongest waves. And in terms of magnitude, the third wave should equal double the first. So you're looking at a target up into that 2,700 area in the gold market on the big picture. In terms of how do we trade this market short term, how do we use these algorithms? This is, again, like a GPS that identifies for you the entry points at the extreme levels above and below the mean. Now, in terms of using stops, we recommend that you do not use straight stops. We give you 3 choices of stops. The only time that you want to use a straight stop is if the market moves in your direction where you want to trail the position with a stop. Otherwise, we have 3 levels of stops. The first one is the most conservative one, and that is if the market closes below the entry level or the pivot point activated the signal. That is the most conservative one, or close below. In this case, you see that the market did not close below. The second one is you wait until the close, or if the market comes down to B2, you can add another multiple depending upon your profile. And so we begin to see pretty much how you can manage these levels in terms of profiles for your account. What is your profile? Can you handle more than 1, more than 2, more than 3? If that's the case, then you can use the third stop, which is a maximum dollar stop. And that eliminates wondering, pretty much where the market is going to stop you out or if it is going to stop you out. A hard dollar stop is a dollar amount that you can comfortably afford according to your profile. And I personally have $1,000 risk per trade on a full-size gold contract or silver contract. In a silver contract, actually, it's a little more volatile, so I allow about $1,500. Extreme catastrophe stop is what I call, where I know that a worst-case scenario, that's my maximum level of exit point. In the meantime, The VCPMI pretty much takes you into the target zones that should be accomplished, and the behavior of the price or the synergy into these levels here would actually dictate the temperament of the market. My target I've been looking at since last few weeks as 1810, and I will rest at 1810, probably hedge, synthesize, take some profits, lock in some profits, and look to see, where the market wants to go from that point on. Particularly if we're moving up into the middle of the month of May, we want to, on this rally into the middle of May, you want to lock in your profits. You want to synthesize your profits. Again, take advantage of this rally. And if you follow this, you want to book profits as the volatility is going to increase. And when you have a profit, you want to protect it. You want to lock it in and, invest it on a longer term basis. So we're getting the targets that we've been expecting here. And I wanted to share this with you here in terms of advanced trading and how you can use this trading tool as a GPS to do your multiple trading if you use multiples. And multiples can be, micro contracts. They don't need to be a full-size contract. Some of our clients, some of our traders are using the micro, and this volatility, it kind of balances out, the risk, because this volatility has broken any benchmark that we know of, and I believe it's just the beginning. So you don't want to get overexposed, and the micro contracts offer tremendous volatility enough that you can make a decent profit. Let's take a look at the rest of the markets here. Massive breakout in gold. Massive breakout in silver, copper, virtual currencies, virtual assets, stocks. They're all exploding to the upside if you're in the metals section or gold mining shares or silver mining shares. Hecla just exploding to the upside, 7%. So this is the response finally that we're getting in terms of movement, you might say, in some of these areas that have been pretty suppressed. Even though we're getting a lot of fundamentals that are extremely supportive of the markets, the markets really have not yet reflected yet, and it could be that we're beginning to see that. If we close above, if we close above the 1810, the monthly, the 360-day average, the monthly 10, that would activate the yearly uptrend price momentum, and the target of 2164 would be activated. 2164. If we close above 1810 on the 360-day cycle, we would be looking at a target activated at 21.64. $18.10 is our nearby target, and it is also the monthly sell one target. So it is a harmonic alignment that we have identified between the monthly and the yearly, and it's an important, very important pivotal point. Silver completing the sell to level of the daily of 27. The weekly target is 27.21. If you have, long silver trades in here, targets are completed, manage your profits accordingly. These are levels that you want to book profits. Hold on to your core. We're talking about day trading, short term, and so it does not affect your core position that we're keeping long term. Long. We're holding on to our long-term bullish position. This does not affect any of that. $27.02 target completed. The sell to level daily has completed. So if you're long, take some profits on the futures. For those that are in the Discord trading room, if you're long, take some profits up here. Hedge, synthesize, keep your core position net long. Hold on to your derivatives. We have a move across the board pretty much in precious metals. Derivatives are nicely moving in the same direction. Up 7% for Nugget, up 8% for JNUG. It looks like we have a market. Looks like we have a market. For those traders that are following GBTC here, go flat GBTC at the market, take some profits at the market, hold on to Coinbase. But take profits on GBTC, go flat GBTC at the market. Market is consolidating up here. 1795.70. Markets are consolidating pretty much across the board here, slowing down a little bit. So, very good day so far. If you've been following me over the last few months in trading this market from the short side of the market here, you should have accomplished some really nice moves here in giving you the opportunity not only to day trade the market from the short side, but also to accumulate on any corrections, as we've been recommending, into the blue levels, into the buy one and buy two levels. And ideally that those levels were into that 16, 70, 80 levels that essentially completed the golden ratio, the Fibonacci, the golden ratio, the Fibonacci retracement of 50%, the golden ratio of 61.8%. So the correction has been completed. The market looks very strong here this morning, just on the basis of the volume of buyers that are taking all of the supply offered here. It looks like we got some serious buying going on in the silver market. Up $1.18, up 4 or 5%. Major reversal taking place. The daily chart, again, you can see this tremendous bar coming out of this bear flag here that we detected last week, just like down here. This was a bit of a bear flag here. If you just draw some lines here, for example, that indicate pretty much that these levels here indicate a breakout. Breaking out of this flag formation that we're looking at is very bullish. It's a bear flag. It's a bullish formation, basically. And the targets that this flag is pointing to is about 1850, 1809 to 1850. And this coincides with the numbers that we have on the code. So this is how we integrate, you might say, conventional technical analysis into confirming, the work that we're looking at, and even the targets that we're looking at. So you can see a very nice channel, an uptrend channel being built here. And the market is trading right within this uptrend channel. So what you will see is that if you apply, conventional technical analysis over the variable changing price momentum indicator, it will only validate the direction of the market that has been identified by the code. The difference is that the code gives you very specific targets, not only just numbers, levels, but it tells you the sell 1 monthly level of 1809 has a 90% probability mathematically that if the price reaches that level, there's a 90% probability that the market could revert from those levels if the signal is activated. So we wait for the market to not only meet the levels, complete the pattern, complete the process, and go neutral to begin another pattern. And that is the methodology all through the code, pretty much. The difference is that the colors tell you exactly what the extreme levels are, above or below. It gives you the average price. It gives you the levels below in blue. That tells you you do not want to sell here in blue when the price is in blue. So now we're approaching the extreme above the mean, which is in red, and we have very specific targets. 1809, 1806, 1888 has been completed. So we use this as a GPS to lock in profits based upon your profile, instruments, and the risk of those instruments that you are carrying. That the code doesn't tell you. That is up to you and your skill as a self-directed individual. Very strong market today, breaking out of the 1790 resistance level, which was the previous. And when the market begins to move, or the momentum begins to unfold as expected, then what you want to do is simply be ready and prepare your strategy again upon meeting these targets. Instead of wondering, why the market is up or where it's going or why it's not going. This gives you a very transparent way for you to manage your trading results, your trading intelligence, your trading discipline, your trading plan. It puts it all into perspective. So it is your responsibility as a self-directed trader, just like a driver, that when you drive the GPS, when you want to drive, you use it accordingly, or according to your taste, when you want to get out before, sooner to the target, or it gives you that opportunity, that flexibility very much, just like a GPS here. So these levels are highly sensitized to a mathematical formula that is simplistic in its presentation, more or less, but very effective in its results. And that's what I'm interested in. This is the way that we've been able to accomplish over 400% since February of last year. And so I continue to support that this is an amazing tool that, depending upon your profile, again, in your ability as a trader, that you can use this as a guiding tool. And this can be used for retail traders, for home office traders, which are using it very effectively, for brokers, flow brokers, professional people. Depending upon where you are in your learning curve, you can begin to customize this algorithm to suit your objectives. So it's an incredibly flexible algorithm that once you customize for your needs, for your objectives and goals, then it becomes a very personalized algorithm for you. One of the points that I really make here is that not every trader is homogeneous. Every trader has a different objective, has a different temperament for risk and money management. And, that is basically something that is very personal according to your profile. What I'm doing here is I'm sharing with you here a trading tool that, in pretty much how I use it, by identifying the entry points, the targets, the stop levels, and trading the market from a technical, mathematical perspective as opposed to a fundamental perspective. Once again, we've recommended our traders in our Discord trading room to take profits on GBTC. We recommended last week. Once the market, let's say at the end of the day, it closes above the let's say sell to level here, in fact, that we're looking at in gold on the daily data that you see here, the 1778.79 is the sell to level daily. If we close on this level, then this level becomes the support for the next higher fractal in price. It goes neutral as a trading system for the day, and it accomplished the targets, and so it goes neutral. And then the signal translates or integrates to the weekly numbers. And those are the numbers now that we are tracking pretty much as a target on the weekly. The sell to target on the weekly is 1806, right in that vicinity. We got up to a 1798.90 so far. We are in an area of distribution of supply. Daily is pretty much neutral now. The daily model is neutral. And the weekly model has entered a distribution of supply area that is a high probability that we can identify, or we can experience or see supply come into the market, selling at these levels. Unless the buying power is stronger than the selling pressure or the supply that is being implemented in the market, and the price will reflect that strength as it is doing right now. The buying here has been pretty strong, taking all of the selling pressure, all the supply that's been given. The ultimate target that I want to see for myself is, again, what the market will do when it gets up to 1809 or 1810, which is a pivotal target point that either will put the cap on the market for the time being in terms of price and revert potentially back into the mid 1750 area. If it reverts from there upon completion first, it has to complete the pattern. And then we will see if the market will want to revert from there or not. If it closes above there, the market is telling us that it does not want to revert, but it wants to go up to the target, the sell one target at that point, which will be 2164. Once again, ladies and gentlemen, thank you for the opportunity to share this incredible information with you, and I sincerely hope that you are taking advantage of it and it is making a difference in your bottom line. Until next time, my friends, please be well. Take care. I'll talk to you soon.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
Folks, John Najarian here with Steve Collegian.